Okay, 2019, and see talk about investment real estate. Should we buy or not to buy? Why we go into 2019 is the economy. What is the new thing is why we don't buy, why we have to buy, we should buy. Worry, right? You worry, that's the economy, you don't have money, maybe you lose job. Economy will go down, real estate we buy it, even though she said 10 years ago it was like this, but they also have some stiff up and down. And you don't, everybody want the best. They don't want to, even though they have 10 years again, but they want to buy it at the bottom. A lot of people say it that way. So, what is it making you think is you worry? And what would make the market change in overall, not just for real estate, but for everything? Anybody have an idea? Okay, let's say maybe US, China, trade war. That's in fact people too, right? People worry because there's both will damage. Who win, who lose will be defined the market as well. Interest rate, probably the factor that driving the market. Interest rate higher to control inflation. Okay? To hold back the expenses, right? So a lot of things here. Let's see. Okay, what is government shutdown? Do you think it's affect the economy? Yes. For the short term, you may not see it. For the long term, it's damage because people don't have the money. They don't have the money. The salary, the federal employee, they don't have the money to spend to buy food. If they don't have food, the restaurant they don't have the money, income, right? So they spend. So everything will be slowed down. If the shutdown keep going this way, we don't want to go and shut down too long. Okay, so that's the effect of government. I read the news yesterday. There is the damage to the economy, probably $6 billion already. It's exceed what the president asked for. Correct, right? Now, interest rate, housing inventory is also define the market as well. Unemployment is the positive thing for the economy at this time. Very low. December 3.9% unemployment rate for the whole country. In the Silicon Valley, 2.1. Most people us have jobs. I have job here to talk. Okay. Okay. So the only thing is, I think that's will affect the economy in 2019. So watch these elements and monitor them to see where they go. Let's say the U.S.-China yesterday, last week Friday, there's some good news. Right? Is it any written news? So they don't go too much aggressive this time. They hold on. Probably both of them see the damage is too high, too fast. But if they go into some kind of agreement, then the market will be stabilized. And depend on what the details of the agreement as well. Interest rate, it might go up too fast this year, will be a problem. I really feel we'll make 1 or 2 times, that's be good. Correct? Let's see, here, the forecast from us, prediction, the stock market is not going very well. In the last year, it went down, it went up a little bit in the last few days. So we predict the Dow Jones stay at 26,000 level by the end of 2019. Almost gone. Okay. So the unemployment rate last December 3.9, we predict it's a little bit better this year. We don't see the sign of losing job, losing employment. I see the consumer spending, consumer confidence very high. Last year December, a lot of people spending money. You know that. Everybody here, I know. Finish this one, you might go for lunch, buy lunch. You might go to the fancy restaurant. Are you stopping to travel? To spend money in holidays? No, you spending a lot of money. I know. I look at it here. Everybody here spending money a lot in December, and then the trend to spend money in January and February too. So that's give us signal, tell us we are very confident with what we are making money today. We don't afraid to lose job tomorrow. And the confidence is the key thing of everything. The confidence that you make money today, tomorrow you have money, today you spend. But if you have $15,000, $50,000, or $100,000 in your bank account, but you know that tomorrow you don't make the income, you might not spend dollar amount any longer, right? So confident, even you have a low saving, but if you believe you make money, going to make money, you're confident. And then it's showing the economy very confident with the employment. And the economy is going up. It's remain good. Okay. Now let's go quick here so we conclude this one. That's we talk about the general U.S. How is Silicon Valley? I say 2.1% unemployment rate is very good signal for everybody. Who here don't have a job? Maybe one or two, I don't know who they are. But if you have a job part-time, full-time, you have a job, you're making okay income. Housing demand, housing supply is still the main factor to determine the housing market, real estate market. 4 or 5 years ago, the local market in Silicon Valley Bay Area followed the principle of demand, supply, and demand. That's called the business, supply to demand. Last year, 2018, the market went out in something like 10 to 15% from the top. But come back 2019, and my prediction, it comes back to the principle that normally market is driven by, which is supply and demand. We still see that there are few houses on the market, but a lot of buyer and demand from us, from each of us. We drive the market up. And it's proven that in the last few weeks, 2 weeks of December 18, and the first 3 weeks of January, we see a big wall standing on right. I see the house just last week, we offer $100,000 more, but we still fail. The list of $899, we offer $950, but the agents, the other side, say, I'm sorry, we have 7 offers, it's going to be above $1 million already. And we see here the houses sold, they used to stay on the market for a while, in December, November, but now they have multiple offers already. So who knows, any one of us here, if you are shopping for home, buy it now. Interest rate is still low. Housing market is still kind of uncertainty because some sellers still worried. Some sellers they are unaware, and some buyer, some people still have time to bargain to buy a home with a low interest rate. Okay, and you have enjoy the new home, your new home New Year as well.